Welcome to FinFactor. I'm your host, Blaine Bertsch, co-founder and CEO at Dry Run Cash Flow Forecasting Software, where we help the office of the CFO leave spreadsheets behind, delivering clear and accurate forecasts to the management team. And joining me today is Adam Katz, the founder and CEO of Cooltra, a global effects platform serving foreign exchange and international payment businesses. And today we're going to unpack some of the complexities in FX that can cost businesses in time, money, and hassle. Thanks for joining me, Adam.
Thanks so much for having me, Blaine.
So, before the show, we were actually talking a little bit about some of the issues that can cost CFOs, like I said, money, time, hassle, all these things. And as we were talking about it, I thought, well, let's actually pull back the curtain on some of the things around effects that, why is there, can sometimes the fees seem kind of high? Why can there sometimes be delays? And so they get an appreciation and start to understand how they navigate this world. So let's dive in. What are some of the issues that they'll face in effects?
Yeah, that's great. In general, B2B payments, have been in trouble for a very long time. It's not only international payments, local payments as well. But particularly international payments come with a lot of compliance issues. You go, hey, if you think about what an international payment is, it's a foreign exchange trade happening where you're converting funds. You've got to receive money in one country. You're sending money into another country. There's a third party the funds are going to. There's a lot of compliance checks in between. So there's a lot of moving parts. And what that means is that there's a lot of people involved. There's a lot of technology involved. And as a result, you often see high fees. And the less efficient the workflow is, the higher the fees and the longer the payment can take. We've obviously come a long way in terms of getting more efficient in both areas, but you're still seeing the top players, the top fintechs that we all celebrate are still charging 1%, 1.5%. And I find it really interesting, even if you go into credit cards and all these other spaces, they're still seeing 3% plus in fees, with a lot of that really ultimately attributed to inefficiencies in these companies' businesses.
So, yeah, and obviously, we are working internationally all the time, and it is one of those things that gives me a headache is moving dollars, across the world to contractors or having businesses pay us. And I'll admit, sometimes I look and go, these fees are really high, and the fees it's like attached to the dollar figure too, right? Where that's the part where I'm like, why is that? Like, is this the same transaction generally, but one is really big, one is really small? Is that just the cleanest mechanism, or why are fees sort of generated that way?
I think that's a great question. I don't really have a great answer for you on that. It's interesting. In places like Europe, what they've at least started doing is when they charge fees on the FX component, it's a fixed transparent fee versus it just being embedded in the rate, and there's some amount of money that goes through to the other side. At the end of the day, charging with a spread on the rate is kind of an obscure way to charge. If you really think about it, at the end of the day, if you're doing a cross-border payment, Canada to the US, for example, if you have access to EFT payments in Canada and you have access to ACH payments in the US as a company providing services, you're only really paying 50 cents for the payment each side. And then there's a foreign exchange transaction that has to be done. And the foreign exchange, yes, depending on how big that company is, they might be paying 0.02% anywhere up to, depending on the currency. If it's dollars, they're probably not paying more than 0.05% from their providers. And so it doesn't really make sense that, you end up paying 1, 2, 3%, especially as the notionals start increasing. Now, definitely as the notionals increase, the charges do ultimately start coming down. But you'll often find that if you get to $1 million, $10 million payments, you're still paying fees charged in like whole percentages. And I think part of that is FX is a very credit intensive offering, right? Especially if you're a business, I'm picturing a CFO who's not buying the FX every time the day they need it. You might have an invoice out a month. You want to buy the FX today. So you're effectively trading an FX forward. And then on the day, you're going to make a payment. Now, there is there's a credit component to that because the FX rate might move in between. And when you go to a bank, for example, they've got internal costings on all of this, which ends up making it that the banks ultimately are setting the bar for what that price is. And then by the time you get to the competitors, they don't need to go to zero. You can have a very attractive offering as a foreign exchange business and still be charging 0.25, 0.5%. And what you'll find is there's a lot of regional players in Canada, for example, many of them are customers, who provide great exchange rates, but they don't have the marketing budget of some of the big fintechs that would be household names that kind of increases that price.
So it seems like there is at least there's somewhat of a competitive environment between all of these suppliers or service companies that are offering this. How, if I'm a CFO and I'm like, man, I've tried different ones here and there, how would I actually, do you have some tips on just like, I know it's not necessarily what you do, but what would you look for to say like, this would probably be a place where I should look this, because you kind of want a partnership that's a long term. You don't want to necessarily dance around all the time, right?
Yeah, definitely. I think we're all looking for that kind of a reliable partner, right, in all areas of aspects of life. The reality is we often see kind of predatory pricing. We often see prices start low, relationship gets built, and then over time pricing widens out. And so it's always important to kind of keep checking prices. What I see a lot of once you start getting to larger corporates is they'll actually have in their bylaws a mandate to use. There's a lot of aggregators out there who could call out for prices to 5 or 10 banks simultaneously every time you have to do a trade. And so larger companies might have bylaws in place that require you to check the rate with 3 or 4 providers in order to actually book the FX component. Obviously, that's an overkill for an SME. I would argue. And so if your volumes are under, say, 10 million a year, you're not going to do that. Build a good relationship with the provider. Try get someone on the phone on the other side. To me, your FX payments are not. It's not the part of the chain that you want to really just log into a platform and click a button. You're booking once a month. You're hedging your million US CAD that you booked in the month. And you want to know where the rate's at. What are you thinking? Get their price over the phone. Is this a good time to buy? And actually build that relationship. And what I've seen is a lot of those relationships do last a long period of time. Those can be 10, 15-year relationships. But if it's just behind a computer screen, I think you should expect a predatory algorithm.
That's good to know. That was something I was totally unaware of. You kind of think you get in, it's just sort of set, right? But you talked a little bit about like kind of hedging those fees as well, and kind of something that we do all the time is pick up the phone. Hey, what does it look like? Where do you think it's going, right? And of course, there's no guarantees. We totally understand that, but there is a real value component for us that I'm not sitting there looking at what might lead to a higher fee or make it or lead to a higher dollar or lower dollar or anything like that. So that's something that we really value, is having an expert there that at least gives some kind of insight. Can you speak a little bit to that how much stock should we put into that? Are all sort of services created equal to a degree, or how do you actually get a good sort of reading of the tea leaves?
It's a great question. I think I will say at the outset, if you don't hedge at all, if you just buy currency as you need it at the rate that you're given, you're taking FX risk. If you're selling into the US, for example, you're hoping US dollars go up. And if US CAD rate goes down 15%, you're now 15% offside. So, if you're doing 10 million of revenue in US dollars, you might want to consider having 25% of that or 50% of that hedged out. The downside of hedging is the companies you work with typically require collateral because there is risk that the rate moves in between. And so that could eat into your working capital. And so what you're going to find is there's a real linear trade-off. Companies who give you credit, which a bank would be a great example, but not every business can get that level of credit with the bank. But there are a lot of companies out there that will give you credit and not require you to put down any collateral. they're going to charge you a higher fee because they've also got to, they have that additional risk. Whereas
Yeah.
other companies, if you place your full collateral, if you're flushed with cash, you can go trade with a wholesale FX provider, and they're going to give you pretty much wholesale rates. But you'll have to pony up the money the same way any other, financial player would have to do so.
Yeah. Yeah. Now you guys actually, like, you're not even the direct FX company, but you equip FX companies with what you do. So obviously you saw like some sort of opportunity there. And what I'm curious about is, what are some of the things that you found that you guys identified that was like, okay, this is an opportunity to help them so they can help, downstream. What exactly did you guys identify, and how do you support them?
So my background was I worked in a foreign exchange company. I was on the desk. I built the processes and saw how everything worked firsthand. And what I observed was that, the actual transaction costs for these firms are very low. It's the operating inefficiencies that really start driving up the cost. And there's really two key areas. One is on their treasury side. So we have customers who have 1,500 bank accounts they have to manage in multiple currencies. And they're trying to give you a service where they're trying to get the money to the other side in the perfect amount of time, every time. And so that requires, technology to know exactly where your cash is sitting real time at all times. You got to know all your payments, all your clients. People are going to send in money all day. You're going to send money out all day. You got to know exactly where your cash is. You want to try and have cash sitting in those accounts, because the way FX typically works is, if you trade FX, and this is a good tip, if you're able to plan ahead, spot in FX is considered T+1 for dollar CAD. So if you trade for T+0, you're essentially trading a more structured product, which is not going to be the best price. So if you can plan one day ahead, even, your pricing is going to be way better, and that's especially the case when you're one of these providers. And so, what they're often doing is they're trying to manage where all the money is today, to allow you to have the best efficient service today. And then they trade on the other side and settle up for the T+1 date. And so being efficient within their treasury operations, knowing where all the money is sitting, not leaving too much cash idling. If you're a Canadian payments company and you leave too much cash idling in US dollars because you want to get those USD payments out as quick as possible and make your customers happy, and then the USD rate drops, that's directly impacted your revenue as one of those businesses. So they're just constantly moving around money, trying to do it as efficiently as possible. The second area is their compliance. So you probably find when you go to make a cross-border payment, you get asked a lot of questions. You have to provide a lot of information. And this is only increasing. We've got a lot of ML issues across the globe, really. And the efficiency of capturing that data, storing that data, leveraging it to file the reports needed with FinTech and other regulators is key to keeping down those costs as well. So that's really what we identified. And what we did was we got all of these firms, we got all of these workflows on a single platform, all of their data on a single platform. So they're able to see everything going on at any given time.
So Adam, I know like one of the things that comes to mind here is like this is immediacy is so important, and really trying to figure out exactly what's going on. And I know when we were talking before, you actually mentioned it's like how important data is, and having clean data and really understanding that. Maybe you can speak to the importance of that, and sort of how do you manage that to best equip a business to do this effectively?
That's another great question. So look, if you're going to a company and you ask them to make a payment, you're expecting that payment to go out as quickly as possible. And so how does that payment get out as quickly as possible is that you have all of the data about that customer. As a provider, obviously, you're going to have all the data of that customer, what the transaction is that they're requesting, where those funds are being sent. You want to have everything done that you need to do. You need to have all of your compliance taken care of. So you've done your sanction screening and your all your different screening you have to do on the person that you're paying to. You have to make sure, we're touching on before, that you've got all the funds you need, where the funds are in the right spot so that you can release the payment. Maybe someone requests a SWIFT, maybe they request an ACH. There's many different ways that you can send funds out nowadays. And to be honest, it's only going to get more complicated with crypto and stablecoins. It's going to become a nightmare. It already is becoming a bit of a nightmare. So having real-time data high quality data, making sure that you don't let those data standards slip. And then the transaction never gets stopped, because as soon as the transaction gets stopped, that's humans getting involved. That's going to check what happened. Payment didn't get routed to the right place. We didn't do a scan in time. That's slowing it down for the customer. The service is worse. The costs increase. And so having all of the right data in the right place at the right time, to me, is one of the key things needed for this. And I think this is going to become even truer moving forward with the adoption of AI, because a lot of these processes are lend themselves very well to AI, but the AI is only going to be as good as the data that it's provided.
Mm-hmm. Okay, I actually want to dig into a couple things here, because I found it really interesting. One, I appreciate you sort of touching on AI and sort of what role that will play, but I'm kind of curious how you view crypto moving from sort of where it is now to being kind of a regular, potentially, I guess, a regular sort of bona fide way that business can move money internationally. How do you sort of foresee some of that coming from the early adopters into a little bit more commonplace, and how do you think that's going to jive with all of the effects things that you guys do?
That's really interesting. So I bought Bitcoin back in the day at $20. I was a very early adopter of Bitcoin.
Good for you.
I got really excited about it. But to be honest, I've been a little bit outside of price appreciation, maybe. I've been a little bit disappointed, because I thought this was really going to come in and truly revolutionize payments. I thought by now every store would be accepting Bitcoin as payment. But the truth is, we need to see more adoption from within the business community. It probably starts on the digital side, right? More tech companies, more digital companies accepting crypto, increasingly stablecoins as payment. I mean, I think outside in Canada, I mean, it's next to no cost to send, up to a couple $1,000s to someone through an email money transfer. In most places in the world, that's not the case. I'm from South Africa originally. Sending money from South Africa to Canada can cost you 25+%.
Oh, wow.
Yeah, 25%. Okay. And so at one point, my dad was being sent money from his sister. And they were like, "Oh, your son has Bitcoin. My son has Bitcoin. Why don't we just do it in Bitcoin instead, so we don't pay 25%? And by the time I got the Bitcoin, it was down 15%. So we didn't do that much better than the 25%. So I think we will continue to see adoption. The interesting thing is, there's been a big debate lately around stable coins, that if you look at credit cards are charging, the actual network fees are like 10 cents on a payment. It's not the 3% that a merchant's being charged. That's coming from the banks. That's coming from the inefficiencies. There's embedded insurance you're being sold in that, and chargebacks, and there's inefficiencies, there's compliance stuff, there's a lot going on. What stablecoins is going to allow companies to do is automate a lot of that operations and create more competition. I've always looked at crypto and digital currencies as competitive money. And so maybe you want to accept credit card payments and you don't want to pay for the insurance on a chargeback, and you'd rather make the payment fee cheaper. Well, then you can go use a certain stablecoin. And so hopefully what we get now is just more competition. It actually getting integrated. I don't think it's a replacement. We always think every new technology is going to come and just completely replace what we had before. We still have mail. We still make phone calls on landlines. But it comes in and augments it. And there's going to be areas that are rife. If you think about things like micropayments, as a business, you want to charge someone 10 cents. I mean, it's almost impossible. And once that opens up, all of the different kinds of business models that can be created, the different ways to monetize in your existing business, is going to get really interesting.
Yeah. I think I agree with you. As I think it's always such a clean story to say, oh, this is going to disappear. This will show up. It replaces it. It rarely is the case. It just sort of it adds to the fabric and it finds its place. And I think you're right. There's places where I could see crypto being even useful for us today to just go like, yeah, I just got to send this overseas, and it makes it a lot easier to some degree in some instances. And in other times it's like, yeah, but the regular, credit card system, or it just works really well. So there's
protection, and the reality is, once you start adding into a lot of the crypto, the compliance stuff, it does get more expensive. So it depends if you're comfortable to operate out of that trusted environment. I think a great example of this that I always use is, do you remember the Magic Jack? About 25 years ago, where you could plug this little device into your computer and make international calls.
Yes, I do. I forgot all about that. Yeah.
Tool. And, we're not going to need telco providers. But in reality, telcos just integrated voice over IP technology. And now we can make overseas calls. And then whole new paradise came on top. You can go on WhatsApp and have a free video call with a loved one across the world. And you're not paying a fortune for this. And both can exist at the same time. It's not that one completely replaces the other.
No, and it's you're right. Like, that competition comes in, and it's rare that the real big, like the telcos, the big, TV was going to die, and then you find out, guess what? The networks are pretty good at making content, so all they got to do is put it online. Really. So it's interesting how things like that innovation can drive competition, and then it drives innovation by existing players all the time, and hopefully it just kind of raises the level of service for everybody. But of course, I can see that. Well, fees will start showing up for crypto. Like, when it gets really workable, like you said, there's going to be all these different compliance and security and everything in there, and the fees will naturally come up, but maybe they'll be less than the typical credit card or bank the charge, right?
And what we're really starting to see this year is that payments companies, in the same way to how telcos use voice over IP in the background, payments companies are starting to use stablecoins in the background of their operations. And they're transferring just between their customer with 1,500 bank accounts. They're transferring just between their own jurisdictions internally. So there's no third party, there's no compliance issues. It's just more efficient. And they're using that to move money around the world very quickly, bypass the traditional banking system. Once it gets local, they then make out a local payment, and it comes back onto the traditional banking system.
Oh, that's interesting. That makes a lot of sense. And of course, who else would know that better than these companies moving money, right? So, and it's good because then you can see that a lot of that will start to flow downhill to businesses like mine, where we actually maybe have a little bit better price breaks and more options and more competition to deal with some of these things. So who should get in touch with you, Adam? Like, who do you guys serve? Who should get in touch with you, and how would they do business with you?
So if a CFO is watching this and not happy with the service from their FX provider, they might want to recommend us to their FX provider to help them deliver a better service. Ultimately, what we've been doing for years is we've been really focused on our product and working with enterprises. And what we've done is our real focus this year is to bring make our technology more accessible to a broader audience of payments companies. There are a lot of payments companies out there servicing a lot of verticals. And what really our mission is we want to help them survive and thrive and not get overrun by the large companies, because they're going to come in and offer niche services. So if you're a business in Edmonton that's, doing business between Edmonton and Mexico, that's a very niche thing that maybe one of the Schedule I banks aren't going to satisfy in the same way. So we want to see an ecosystem of a lot of competition, everyone fighting to compete to make things more efficient, bring down prices, make things better for SMEs, make things better for individuals, especially in the globalized world we're living in today. And we just want to be a part of the solution.
And so how should people find you and your company?
So you can find me on LinkedIn and Adam Katz. You can go to our website, www.cultura.com. Always happy to have conversations with anyone who's interested in the space and looking to it. Yeah,
terrific. And I'll make sure it's in the show notes for all of you. Just look below. You'll see all of it down there. as well. And thank you all for joining us today. And again, if you're a CFO and your team is buried in spreadsheets working on your cash flow, come and talk with us. We're going to help you deliver something to the management team that's crystal clear, easy to understand, accurate, and it'll also save you guys a bunch of time and hassle. Thanks again, Adam. Really appreciate it.
Thanks so much, Blaine.